Hello viewers and welcome back to Dukascopy TV. It's Tuesday and that means we're joined by Bruno Estier to discuss some of the technical charts. Bruno, thank you very much for coming in today.
Good morning, Natalie.
Now, I know that you want to speak about three specific markets. We've got the best, i.e. Japan, the key, the yen, and the worst, gold. What's so specific about these three markets?
Well, the first one is certainly the one which has performed best this year. This is the best outperformer, and this is the Japanese Nikkei. We have here since 1989, when it used to be at a bubble top, and then a long decline which is making a base. And especially for last 12 months, it has started a cyclical rise, and it's reaching some important levels. These levels is represented by this nice red cloud, where the close of this December is probably popping above that level of 15,200. And we'll see on the top part of the charts, in orange, the yen evolutions, where we obviously notice that the yen has been weakening, and it's reaching also kind of a long-term trend line right now, not exactly right now, but it's coming close to that. On the other hand, we also have the so-called underperformance of the Nikkei versus the S&P 500, and that has also been bottoming. So this so far is relatively good news.
What could go wrong then? Where's that downside potential?
Well, when we had 3 weeks ago a break above this triangle, what occurs usually is buy signals. But these buy signals doesn't negate any possibility of a minor pullback. And this is what has been developing since the beginning of December. Most probably, if the market the Nikkei is able to hold within that rising channel, then there will be no big deal. If it would break the level of 14,500, then it would be more of a concern. But so far, things are relatively fine. What would cause eventually a further short-term decline is the correlation which we can see here with the yen index. If we look closely to what has happened in May, we notice that around 96, it's a level where we are close to, and we can see that on the next chart, for example.
What could cause that pullback then?
This, as you see, many things can cause a pullback for a market. It can be declarations, it can be different things. But what we focus as technical analysts is the correlation between the yen weakness, and the rise of the Nikkei. And also, we notice that this yen weakness is represented here by the rise of the euro-yen. And one worrying thing is that we have reached the strong resistance at 142. So in fact, we have made the trip from A to B. And what's happened after B is probably a little bit more uncertain. And we see that shows up also here in the yen against the dollar, the yen weakness. In fact, here we could draw so-called small wedge. That means it looks like a triangle, but it's pointing downwards, and everybody does not worry when it's pointing downwards because it says it's still in the direction of the trend. However, this particular pattern has the propensity to pull back quickly once it breaks its upper trend line, and we are just about there. Also, you notice this 90.62 level is very equal or close to the 90.41 level. And therefore here we need to be very careful between now and the end of the year to see if we are going to get some signals.
So if the best market stops the rise, does the worst prevent its decline then?
That would be fantastic if it would happen. What is the worst market? That's probably gold. And because gold, as we see during all of 2013, has been coming down more than 20%. And if we look at these charts, which starts in 203, we notice that the last major low was in 208. The recent one is well known by everybody. That was in June, July of this year, around 1180. And the question is, what's happening here? Many people disagree. Some people believe that the trend is still down, and short in the medium term or over the year, it is still down. It is below the cloud, so at the opposite of the Nikkei, it has some propensity to continue down. However, if we are going to focus at what's happening right now in the last months, and if we do that, what we noticed is that, as we noticed already 3 weeks ago, this rising trend line is kind of magical. At the present time, it's holding. That means that there are buyers who are coming back at these levels and think that probably gold will not break this trend line. And that's probably the shining things for Christmas that might happen.
So you are anticipating a rebound then, or?
I'll anticipate a rebound from now for 2 reasons. Now we are still holding above the rising trend line for 3 weeks. And the momentum is not overbought. That means there is probably more resilience to rebound than to go through that line. And the rebound is going to be taken as obvious by the market only when we move above 1300. So we still have a little bit to do because we are only 1240 presently.
But still a potential for a Merry Christmas for gold traders then.
That's possible.
Bruno, thank you very much.
You're welcome.
Bruno Estier will be back with us in the new year, but don't go away because we've still got plenty more exclusive interviews before then. Goodbye for now.